All right, we're going to go over the trade I took on Friday. This first one right here, I ended up being in profit $1,000 on Friday, but I just want to talk about this one trade. It was a 22-minute trade, as you can see, entered at 9:59. I was out by 10:22, made a $402, 100% profit. Okay. This video is not for teaching purposes. This is just a recap on a trade I took. You can take what you want from it. If you don't know some of the terms I'm using, then I urge you to go do your own research. So this is QQQ. First thing I do in the morning, I draw out easy, obvious liquidity zones. So the first thing I did was, pinpoint these. And I'm going to show you my strategy in a second, but if my strategy were to be telling me to go long, I usually look for contracts out of the money over here, or if it tells me to go short, I look for contracts out of the money over here. Obviously, since these are zero DTE contracts, they're pretty inexpensive. Whatever you may think about zero DTE, if they're too risky or whatever, I don't know. That's you. I just do what works for me. So I pay attention to the NASDAQ futures. This will tell me what I'm going to do with QQQ. And I came up with a strategy mostly trying to pass like evals and things like that. So just trading in the E-mini. And then at some point, I was just like, wow, I can apply this to options on QQQ. And I've just been doing it ever since. I don't really pay attention to the charts on QQQ. Honestly, I just watch NASDAQ. So let's go and fast forward. I trade on the 3-minute. And I wait for the first fair value gap that appears on the 3-minute, right? Let's bring it back by 1. All right. This fair value gap appeared 9:54. I marked it out as soon as this top candle closed. And then my next candle would be my confirmation, whether I'm going to go long or not. I got this nice bullish candle. So I was like, okay, I'm going to go long. Real simple. About like 10 seconds before this candle would close is when I would get in on the future side, and same for options. I go for a 1-to-1. That's all I do. All right, 1-to-1. Stop loss below the fair value gap. And at this point, I'm looking at buying these contracts right here, right? This tells me to go long. So I'm buying out of the money contracts over here at my liquidity pool, and I made profit buying these over here, but I could have bought options at any of these strike prices above and made a profit. So at this point, 621, I entered. Let's watch the trade play out. Small pullback. And boom, out of the trade just like that, 1021, 1022. And we caught a $2 move on QQQ. And that's it. That's all I do. And I'll show the trade right here. I entered at 621. I bought 50 contracts. I ended up buying more at 622 when we got this pullback. Oh, no, this was at 622, and I bought at about 10:15. So when we were getting this little pullback, I entered more, and I got out at 623 at 10:22 for this 100%. That's the trade. This is the options chart. You can see I could have made a lot more. The market ended up going crazy afterwards. So could have made a lot more. The contract was going for $21 a contract, but I just go for these 1-to-1s because they're nice and easy, and I do this every day. All right, thanks for watching.